Hi everyone, August Biniaz here with CPI Capital. I'm joined by 𝗖𝗽𝗶 Benesocky. Welcome, Eva.
Thank you, August.
We host CPI Academy YouTube show dedicated to adding value to our viewers' investment journey. We bring on experts and discuss all topics related to real estate investing. Please subscribe to the video. We hope you enjoy it.
And we hope you guys enjoy it because today we are joined by Dave Seymour. So welcome.
Hey guys.
Welcome, Dave.
How are you? I'm a little concerned though. I got to go after you straight out of the gate. You're reading the intro off a card. Come on, man. Let's get some free flowing going on here.
But the thing is this, my questions to the guests are up here.
Yeah,
so
all right. Then I'll let you off the hook.
Right here. So you won't see me looking at the notes no longer. But great, yeah. If you like
Dave, let's just jump right into things. We see you everywhere. We see you're kind of here, you're kind of there. You're on TV shows, podcasts, YouTube, of course. Where are you currently working on a deal right now?
Yeah, we are. Look, let's dial it back a little bit. It's interesting what you said. We see you everywhere right now. And before we started recording, we were talking about, the new world in which we live, right? Who can make the most amount of genuine, valuable noise in the marketplace to attract attention, right? It's the new. I did a call recently with our local radio station. I do a show every week. And the guy that runs the engineering at the radio station, he said he picked up on a comment I had made. And what I said was, I said, relationships are the new currency for 2021, right? You guys are in Vancouver, I'm in Boston. Yet somehow we connected. I don't know how we ended up here today, but I knew I was with the right people within 30 seconds of us, having a pre-interview interview. Yeah. So, we're out there. Yeah, we're making a lot of noise. And yes, we're involved in a lot of transactions right now. So we are commercial real estate investors in the Floridian market. As I said to you, I'm in Boston. So how on earth, am I doing my business down in Florida? Well, there's no I in team. So who's your team? Who's around you? Right? What's the depth of your network? I'm very blessed that my team is robust. Freedom Venture Investments, the management level is basically three individuals, myself as CEO, and then my chief investment officer down in Florida in our Fort Myers office is a gentleman by the name of Walter Novicki. And then we brought the millennial on the team. We brought in the young gun to supply all of the skill sets that Walter and I don't carry. Walter's in my age group in the early 50s. So we brought on Eric Wilson as our operations officer, and he's such a critical piece of our company because he supplies all the glue, as the best way I can describe it, right? If I say I want to get a message out there, like you say, you're out there everywhere, how do you do that? Well, Eric takes care of that, right? He takes care of all the processes, the investor portals, all of the flow, if you will, of our business is created. So that's the three team members. Couple of deals on deck right now. We're just closing on a nice 8-unit condo complex this week. That's coming into our fund structure. We're raising for 81 units in the Orlando market right now. We anticipate closing on that in 30 days. That's a nice deal. It's a workforce housing deal. It's got a lot of hair on it, as we say in the industry. It's got some teeth to it. It's got some guts. It's not pretty. So we're excited about that deal. So yeah, we're aggressive. We're real busy. We're aggressive. LOIs are out. Negotiations are going on. So yeah, it's an exciting time. It's real estate is, it's a beautiful vehicle for creating long-term wealth, not only for us as operators and participators, but then we get to share that value component with our accredited investors, and they get to play alongside us. So
awesome.
Love what I do.
You're speaking our language. We love it. But allow us to take a step back because there's a lot of important points that you touched on. You touched on the Florida market. You touched on bringing on and having the right team, millennials with the technology and the marketing kind of component of it. But we'll touch on those in a moment. But tell us about your background. How did your journey in real estate start? And as you progressed, like 𝗖𝗽𝗶 mentioned, we see you everywhere. We want to talk about flipping Boston as well. But tell us about your start and your journey.
It's a little unique. It really is. I'm not an American by birth. I was born in London, England. I grew up in the south of England, and I grew up in a very blue collar family. My father was a heating and air conditioning guy. My mom a secretary at a bank. And, you know, I grew up poor, but I didn't know I was broke. Give me a soccer ball and some green grass. I was a happy kid, right? That's how I grew up. Long story short, I came to the States in my very early 20s and followed a plan, I think, that's been laid out for a lot of people, both Canadian, English, and American. I'll use all three of those cultures. There's some differences in America that we could maybe get into, but you know, the English culture and the Canadian culture is very fiscally responsible oriented, right? Debt is bad, and you know, you don't spend more than you earn, and you can only, if you can pay for it with cash, then that's a good thing. You know, all of that kind of mentality. But for me, in the States, I was very blessed to land a good government job. I was 29 years old when I was hired as a firefighter and a paramedic working in the city of Lynn, Massachusetts. And I loved firefighting, guys. I mean, I absolutely loved it. I loved the camaraderie of the team. I also loved the service that I could give to the community. And, you know, if I want to be incredibly frank and transparent with you, I'm a little crazy. You know, I like to be contrarian. And there's nothing more contrarian than going into a burning building when everybody else was running out. However, with that, I bought a lot of financial ignorance. I didn't understand finance. I didn't understand leverage. I didn't understand debt. I didn't, you know, and they gave me credit cards and they said, keep on refinancing your house. And I'm like, this is America. This is awesome. I remember talking to my father, you guys will appreciate this. I called my dad and I said, Dad, you're not going to believe it over here in America, mate. He said, what's that, David? I said, they let you spend more money than you earn over here. He said, what? I said, yeah. He said, no, that's illegal. You'll go to jail for that. I said, not in America, Dad. It's just the way it is. It's crazy. They keep on giving you credit, but they don't give you any you know, financial education to go with it.
Yeah.
And, you know, I paid a price of that. And in 2006 and 2007, I was working as many as 120 hours a week between 3 full-time jobs. The fire department, I worked construction. I ran a small construction company, and then also another part-time job on top of that. And look, you pay a price. You pay a price for trading that much time for somebody else's money. And it cost me marriages, plural, almost cost me a relationship with my now oldest son. Anyway, I was in a pretty dark place. I'll be honest with you. My house was in pre-foreclosure. I'd made all of the financial mistakes that anybody could potentially make. The hard part for me is I'd always done the right thing. Work hard, don't lie, don't cheat, don't steal, right? Be a man among men, a worker among workers, all of that. Be a good husband, a good father. And it was all going to hell. It was going to hell in a handbasket. It wasn't reaping rewards. And I heard a commercial on the radio, and it was Teach Me Foreclosure, a free 1.5 hour seminar coming to your neck of the woods. It was the seminar circuit. Okay. And I went, it was interesting because here's what I had. I had one of those, I call them divine moments. Those that seek shall find. When when you're looking for the answer, the message will come down if you're open to hear it. And I remember thinking to myself, real estate investing. I remember those investors showing up at my construction sites. They wore nicer clothes than I did. They drove nicer cars than I did. They lived in beautiful homes that I didn't live in. And they seemed to be smiling a lot. They seemed a lot happier than I was. What are they doing that I'm not doing? And so I went on a quest, and that's how it started. I got versed in some financial education. First of all, here's what happened to me. And I don't know if you guys resonate with this. I think you do to some point. There was a guy on a stage, and he said to the crowd, he said, if you show me who somebody takes their financial advice from, he said, I will show you what their financial future will look like. And that was like a dagger in the heart a little bit for me. I love my father, right? It's not a case of love or morality. It's a case of education. I was destined to always be a worker among workers and never to step into the entrepreneur that I am today. So that was how it all started. I learned single family houses and buy, fix, and flip, and I learned contracts. When I understood how to read a mortgage, I was so angry because I started looking at all the mortgages, all the refinances I had done on my primary residence over the years when people said they were doing me a favor. And I look at the mortgage originators, which was chaos in the States in 2004, 5, 6, and 7, 5 points, 6 points, 7 points on a loan. Like, oh my Lord, ouch. I got educated. So that's kind of how it started. I really, I went after it with a vengeance, and along the way became very proficient in pretty much all aspects of real estate. And along the way, we get the TV show. I was in the education space. Guy said to me, "Hey, you're really going out and doing what we teach. Do you want to teach it?" And I'm like, "Dude, I just came out of foreclosure. I'm not a millionaire on a stage with a fancy watch. You all right?" He said, "Dude, just tell the truth." I went, "What a novel idea, right? Be transparent, tell the truth." And I was very blessed to have a fantastic speaking and education career. And because of that, somebody in the education world suggested I send in an application for a TV show. And next thing you know, I'm the star of A&E's flipping Boston. You know what I mean? And they're following me around. I'm the big angry contractor. So, yeah.
Must have been the accent.
Must have been the accent.
Yeah,
Thank you for sharing.
What an
all of that
incredible
with us.
story.
Yeah.
And you know what? Just listening to you speak and coming to this realization that the consensus for our guests, obviously we have guests and we bring on experts mainly about multifamily investing, but there is a consensus there, which there is an aha moment. And it doesn't come from people who grew up in real estate or people who came from a golden spoon in their lives, or silver spoon, I think the saying is. But it comes from people that either have the W-2 jobs or have been put through the grinder and make that realization that, just like you said, that hey, there are other people playing the same game, working much less than me, but working smart and are achieving so much more. And as soon as that realization takes place and that transition takes place, I mean, it's the same thing that me and Ava went through. I was probably at the time 12, 13 years of being a construction real estate guy myself, putting through the grinder, brick by brick, building my business, but eventually coming to a realization that, hey, listen, a lot of clients that I built for on the multifamily or single family are making 4x, 5x as much as I make. And they're passive. They're 100% passive. And they're just making smart decisions, smart investments. Same thing with Ava, 10 years.
10 years of being in the real estate business and dealing with.
Let me ask you a question, because I think I'm pretty confident you both resonate with this. I remember like my first 2, 3, 4 single family transactions in Essex County, where I am in Massachusetts. You would go to the registry of deeds for our closing. So we would go there. There would be an attorney present. The realtor for the transaction would be present. And then everybody would sign their documentation. And then they'd all walk away with their checks. And we all got to see what everybody else made. And I remember consistently walking away from the closing table and the attorney grumbling because the attorney made $6,000 and the realtor grumbling because he or she made $6,000. And I'd walk away with a 10x check, 60, 70, 80, 90, $120,000 on one real estate transaction. And I remember looking at them, and I don't know if you get the sense through a Zoom, but I want to give this to everybody. I'm like, I want to convert the people who need to be converted. You know what I mean? I'm like on a mission. And I'd be there with attorneys, and I'd say, "What are you doing? You should be investing. Look at my check. Look at your check." And look, I didn't understand a lot of I think it's the nuances or the hierarchies out there. I was a bull in a china shop. I consistently say I'm a blue collar guy making waves in a white collar world today. You know what I mean? And, but to your point, it's not that hard to learn the business. Once you learn the business, the fundamentals are the same, whether it's a single family buy, fix and flip, or whether it's a $7 million acquisition that we got on deck right now. It's my first mentor in multifamily owned 7,000 doors in probably 6 or 7 different markets in the US. And I remember learning from him, and I felt like, I was Obi-Wan Kenobi and Luke Skywalker. You know what I mean? I was his Padawan. And I remember him saying to me, he said, "David, it's just zeros. if you could just disassociate yourself from the zeros and understand that, you know, net operating income will give you a valuation, understand the cap rate in a marketplace. He used to say to me consistently, live or die by your NOI, live or die by your NOI. And the simplicity of a highly complicated transaction, take all of that. It's all of the hoity-toity, oh, it's commercial real estate. You've got to be a Harvard graduate. That's bull dinky. It's crap. You don't, you know, it's fifth grade mathematics applied at a high level of understanding. And, you know, I found that being transparent, being real, when I don't know, but I'll get an answer. You know, I found that to be one of the most powerful tools I brought into my real estate investing career, no matter what it was, whether it was my first check for $5,000, which was what we call a wholesale deal in the States, you know, where you control the purchase and sales agreement. And I sold the equitable interest, to, you know, the millions of dollars worth of transactions that we do today alongside our investors. So
absolutely. No, and it is the mindset. I mean, we all see lots of quotes on Instagram and social media being thrown out there. Hey, it's you know, you can achieve what you want, but that is the reality. It is the mindset for, you know, and I talk to associates and what have you, because they know my background was in single family. I'm like, putting a single family deal together, in some cases is probably more difficult than doing a 10 million plus multifamily deal, because these multifamily deals, you're dealing with professionals. You're dealing with third-party property management. Everybody knows what they're doing. Whereas in reality, there's more work to be done in a single family. I mean, same mindset was when I was, you know, starting out as a junior project manager doing small fix and flips. In a renovation project, there's more nuances and difficulties and unknowns than a new built single family, because again, it's different type of trades you're dealing with. There's no unknowns. You have the plans and you go forward. So it's true what you say. Now, one more item that you touched on, I want to briefly touch on here is, when you was seeing the attorney there, you were seeing the broker, and the moment where you're like, hey, you know, I want to be able to spread this out more, get more people involved, so there's more income. And that's the incredible thing about the syndication process, about the, you know, real estate syndications, being able to allow multiple investors, tens, hundreds in some cases, participate in an investment, and for the GP, for the sponsor, to actually get a portion of the profits relative to the performance of the asset. Putting my investor hat on, I couldn't find a better deal. I couldn't find a better opportunity as a real estate investor out there. Now, US happens to allow for a lot of these returns that Canadian deals don't allow. That's why our focus is in the US. But what made us convert was allowing others to participate. This concept, which Ava likes to call democratizing real estate investing.
But I like what you said.
I like that.
You said the hoity-toity and the school degree and all that. You don't have to be or come from a really wealthy family. You don't have to be this. You can be part of something where how the rich keep getting richer. You can be part of that by pooling together capital, being a passive investor, and building your wealth in the background. This cash flow.
It's barrier to entry. I talk a lot about this in a lot of the noise that we make out there. The institutional quality investments are called institutional for a reason.
Yeah.
It means that only the institutions in the past have been able to invest in them.
Yeah.
So the average accredited investor would look at a 75 unit, beautiful apartment complex, B-class asset, Naples, Florida. And I don't know about you guys, if you've been down to Florida, but when I would go down there on vacation, I'd drive past those beautiful complexes and I think to myself, who the heck owns that?
Yeah.
Well, it's got to be Wall Street. It's got to be, it's got to be the Harvard endowment. It's got to be Yale. It's got to the insurance companies. They definitely own it. Probably Warren Buffett owns that one, and Gates owns that one, and Tesla owns that one, because that was our mindset with it. But even if I could wrap my head prior to being educated, I could wrap my head around the financial component of it, I still thought to myself, how on earth do you find them? How do you analyze them? how do you value an apartment building? Like, come on now. So there were these barriers to entry. So there's access to good deals, access to capital, and then access to education. I was just listening to a webinar today, and the guy made a fantastic point. He said he lives by the 10,000 hour rule. And my ears perk up because I like simplicity, right? And basically what he's saying is statistically, it takes 10,000 hours on one subject or one, execution to be an expert on it. And I quickly did the math and I went, oh, I'm good. I got my degree. I've passed, right? But think about democratizing real estate, the way you put it, Ava. The majority of our investors, passive investors, LP position investors, they don't have that 10,000 hours. They've still got to show up at whatever it is that they do to create income for themselves and their families. But now they don't have to get brutalized by all the other crappy investments that are out there, because guys like us lower the barrier to entry. Yeah. Through finances, through education. I won't take an investor's money unless they understand, unless they're educated, unless I actually still am that guy who wants a phone call with them prior to their investing, just to make sure that the boxes are ticked. So, we supply a service, my friends. We really do. We do great works and, create great incomes, not only for ourselves, but for our investors as well. And it's not hard to stick by the rules. It's when people, deviate from the plan, when they put too much sparkle on something. It doesn't have to be sparkly. This thing shines quite nicely on its own without dressing it up in a pink frilly skirt and saying it's something else,
I always call them diamonds in the rough.
Diamonds in the rough. Yeah, for sure.
That's incredible. Maybe we can jump into there's no I in team, and maybe you can tell us a little bit about your team and team building, and how you kind of found your team.
Yeah, so it's interesting actually. I was with the young guy, Eric. Eric Wilson's been with me for about 2.5 years. I actually sold him some education at a seminar, and the kid was so on point. The guy was just like, when people show up in your life and you're like, I don't know what the purpose is, but I'm not letting you out of my sight. And that was Eric. And Eric is everything that I'm not. He's detail oriented. He loves spreadsheets. He's systems. He's process. He's analytical. And we were running a very nice hard money lending company pre-COVID. We had built all the infrastructure. We were working off of a $50 million line of credit with a company called Brixton. And Brixton's term was real simple. Yeah, work the line of credit under our lending criteria, but we want you to sell that note to Wall Street so that we can keep turning the money, which was fantastic. We had about $18 million in loans coming through the pipe. COVID hit. Wall Street said, we're all done with the non-QM, non-owner occupied loans. We're out of here. See you later. And we're like, what? Now we choked us out, choked out our business. I go out of business in 3 days. 3 days, guys, I'm done. Because I didn't have $50 million. I need $50 million to be in business, right? So look, entrepreneurs, true entrepreneurship is the ability to pivot, right? Take a look at the landscape, reassess, and then execute and move forward. So Eric and I kind of like took a couple of weeks off, got rid of some dead weight that was around us, and, put the radar up. And Walter Novicki, the gentleman that I mentioned, I knew Walter from the education space. We were working together in different parts of the country, networking, educating, doing business. And we got on the phone, and I knew Walter was, the ninja, if you will, in the Florida market. Walter's in his mid-50s, served his country, had a very impressive military background. That's important to me. I come from a firefighter military background. What weight that has for anybody else isn't necessarily important. I want to know that when I go, I'm going with the right team around me, and Walter was definitely somebody that I would jump at an opportunity to be in business with. So, we looked at each other. We're in that COVID that COVID moment. And I said, what do you see, Walter? What are you working on? He said, look, man, he said, my career down here, he said, I've raised $125 million in private equity. He said, I've deployed that capital and I've paid it back and met all of my double-digit targeted returns. He said, I've done about $250 million with $1 billion worth of real estate transactions down here. He said, what we are about to go into as a COVID-related process, he said, is going to be unprecedented. He said, and here's what I see. He said, I see the mom and pop organizations, the amateur investors in the smaller asset classes, 20 to 150 doors, B-class properties that need repositioning. He said, those people are going to be hurting. He said, we can syndicate them and buy one or two. He said, oh, we'll go out and we'll put together an investment fund, just like a mutual fund. He said, we can put an investment fund together. He said, and let's try and raise $100 million. He said, we'll use the TV brand for the retail investor. He said, if you've got anybody else you can bring on board. So I bought Kevin Harrington, the original shark from Shark Tank, real good friend of mine. He's in the Tampa market. So I brought Kevin in for business growth and scalability. And that's what we did. We put it together our Securities and Exchange Commission documents, created the fund. We're about 50% of where we want to be on the raise side. But the good news is this is always important. What's important to an investor is can you put my money to work if I give it to you, right? Do you have deals that you can put in? Can I get my returns? And the good news is yes. All the capital that we have bought in, we have put out, and we're paying our quarterly distributions to our investors. So that's the team. And it's a very niche buy box. It's B-class assets inside our fund structure, B-class assets. Like I said, 20 to 50 doors with a repositioning to them. It's called core plus. Core meaning cash flow, plus meaning an opportunity to reposition. And how do we execute that? Well, we've got construction verticals in place with our relationships. We've got property managers, which is critical, right? Our property manager is a gentleman by the name of John 𝗖𝗽𝗶𝘁. I've known John for over 15 years myself. And he's got about 1.5 million square feet under management in different markets throughout the country. And he's building up his team to grow with us as we bring more and more assets in. Our team also consists of institutional capital conduits. We brought two team members on, Karen Todd and Eric 𝗖𝗽𝗏. Eric is a great direct line to family offices, high net worth individuals. He's been an invaluable part of our team. And Karen Todd, we're this close. I almost don't want to bring it up because I don't want to kibosh it, but yeah. Karen Todd is just about to bring $100 million into our company for Section 8 and workforce housing projects that we're looking at down in the Florida market as well. So, you know, I'm just the mouthpiece, guys. I'm like the conductor telling everybody it's just zeros. We're going to be great, you know, but it's really having that foundation around us that makes us successful, you know.
Incredible.
So that's my team.
Amazing.
Just the process when you heard this story and what he's been through and the difficulties going getting foreclosed on, and now to manage a fund and to be able to help hundreds and hundreds of people to kind of invest in the fund. Now, on a high level, Dave, if you don't mind, explain what a fund is. Obviously, earlier we talked about syndicated investments where groups like us find one deal, then we bring on investors for that one deal. But a fund is more kind of broader. So give it kind of
we do both. We do both. So the fund is the PPM, the private placement memorandum for the fund, describes the methodology of our acquisitions. It describes what we buy, where we buy it, and why we buy it, and what we're going to do with it, right? So instead of an investor looking at 123 Main Street and saying, I own a piece of that, what they now do is just like a mutual fund that a planner will put in front of an investor, we put a group of properties in one bucket together. And we say to the investors, invest in my bucket, and then we're going to go buy as many properties that meet that buying criteria to fill up the bucket. Once we get to 100 million, we'll stop the raise. So the way this fund works, it's for accredited investors, minimum investment into the fund is 100,000. For that 100,000, they then own shares in the management company. Those shares are prorated on the assets that are in the fund. For those shares, or the targeted return that our investors are looking for based off of our methodology, is a 6% preferred. Don't invest with us if you think 6% is where it's going to be, because that's not the way it works. The preferred is the starting point. After that, they go into an equity split or a share on cash flow with us as the GP. So if I don't do a good job, I'm not making any money. Yeah. We also invest alongside our investors, which is important. So the targeted returns inside that fund structure on $100,000, using that as a number, is 8 to 12% quarterly distributions, annualized over 1 year. But what's nice is the way we put it together on a 72-month hold for the fund is we'll liquidate the assets in the fund during those last year and a half, 2 years. And then the investors are also participating in all of the upside on the sale of the assets in the fund. So they get 75% of the cash flow, 75% of the equity, giving them a targeted, what we call IRR, an internal rate of return, which is the value of the money working over time, of around 18 to 20%. Nice. If you like to use a multiple, an investor likes the multiple, we target out like a 1.7 to a 2.1 multiple is what we shoot for working their capital. That's the fund. The 81 doors that I was just talking about, the ones that we have in the Orlando market, well, that's workforce housing. That's a little more of an aggressive rehab. It's a little more of an aggressive return portfolio. So that we do that as a sidecar deal. So we're in the middle of a $3 million raise. We've got about 1.5, and we haven't even put it out to the market yet. Nice. So that deal there, here's the magic of this stuff. It's so good. Everybody wins. See, some investors say, no, I don't like the fund idea. I want to know my money's on 123 Main Street. Okay, well, this is 123 Main Street. This is 81 units, Lake County LLC. We're still the management company. We're raising. Here's your money. It's on this property. That one looks like a 6% pref, a little more aggressive on the quarterly distributions, shorter hold time, 3 years. And then the multiple on that's coming out like a 2.4 targeted on that one. That one actually is going to be better than that, we hope, where we target. We found a massive mold problem in due diligence. Now, you've got construction background, right? Oh, mold, run away. No, mold, run towards it. Contrarian, firefighter mentality. The seller needs to remediate the mold to transact. The seller's motivated. So we're going in there. We got a little extra construction. We got a little extra bump on it. There you go. Fund, pool of properties all in one bucket, syndicated one-off deals. But here's the magic. We keep the fund as a very, very minor participant in the syndicated deals. So then the fund can also show assets under management because they're part of the syndicated deals as well. Okay. Which is really good optics for a lot of investors as well going forward. So we get creative with it, but it's definitely, you know what's funny? I'm not even in real estate anymore. Let's just go serious, right? I'm in finance today. All my conversations are finance, you know, yield and spread and, you know, GP, LP. It's a finance conversation today. I miss the sticks of bricks sometimes, you know?
No, for sure. And it's that balance, right? Yeah. It's that balance between to have a fund or to be able to do a real estate private equity deal, you need to have the deal and you need to have the equity. Now, it's that balance of, how much time is spent for an operator, or depending on how large the team is, how much time is spent to cultivate those relationship potential investors, in your case, also educating the investors, and then finding the deals, underwriting the deals, managing the deals. So it's, we love it. We love it. Especially for people who get bored of things quick. We love the complexity of it, but also the doability of it as well. So
and on your YouTube channel, you have that you keep posting. I love that.
I'll give you a perfect example of how cool this business is. Are you guys familiar with the new app that's out there called Clubhouse?
Yes.
Have you heard? Are you on there? Are you on Clubhouse?
Yes.
Okay. So here's my challenge to you. Follow me on Clubhouse and hit the little bell.
Okay.
And what we'll do is we'll do a room together in Clubhouse.
All right.
I was on Clubhouse. Look at you guys go straight to that.
We'll do it right now.
I was on Clubhouse and I was in a in a commercial real estate room on Clubhouse. And, you know, I'm lucky in the sense that the TV.
I'm already following you, and the bell is already on, Dave.
Okay, good.
Yeah,
All right, good.
So right there.
There you go. Handsome devil. Look at that. My followers are 5.5. We got to get those followers up.
Nice. I keep followed.
All right. Awesome. But I was in Clubhouse, and I'm lucky. I get called up on stages because of the TV stuff, right? So, you know, leveraging out experience to get more noise and exposure. Anyway, long story short, this deal that I'm talking about, the 81 units, I'm in Clubhouse. I take a relationship off a Clubhouse. I start talking with another syndicator, and this young guy's like, Dave, what do you got going on, man? He said, I can't find any deals. He's in the Midwest. He said, I can't find any deals. I said, I got more deals than I got capital. He said, I got capital. I said, I got a co-GP position if you got capital. He's like, really? I go, yeah. I said, look, man, together, collaboration is the key. It's not competition.
100.
So he goes through the PPM. He rips apart our underwriting as I expect him to. And he comes up with about 1.5 million of the $3 million raise.
Nice.
So he's already bought himself at 10% of the GP position. So that's 10% of the acquisition fee, 10% of the cash flow, 10% of the equity. He bought himself a great deal, and he's already aligned with some guys that are operating at a high level.
Incredible.
So, you know,
what was the total equity raise on that?
3 million.
3 million.
$3 million.
He brought in $1.5 million.
$1.5 million between, I think he's got maybe 15 or 20 investors.
Okay.
And here's what's cool about it. We work with an investor portal that allows him his own portal as the co-GP. So his investors sit underneath him. So if that investor ever does business with us, there's always a good relationship there. You understand what I'm saying? It's not poaching other people's investors. It's that collaboration rather than competition. You know, so he buys himself a seat at the table on the work that he's done prior, right? Because these investors have invested in some of his other syndicated deals, and now he's a co-GP with us on this one. And I tell you, when I find that kind of relationship, it drives me to make this deal so freaking good, right? That he's like, I'm never going to find another deal. I'm just going to raise money and be a co-GP all the time, which is okay. Which is okay, right? It's all tides rise, all boats, or whatever it's called. Level up. You understand what I'm talking about.
Of course.
So I love the creativity of it.
Awesome. We love it. We love it. You speak our language, like I mentioned earlier. So,
totally speak our language.
You know, absolutely. But let's kind of go over a couple of these items, if you like.
Yeah, I actually wanted to ask Dave, what books you use for self-development and to scale and manage your company. Maybe you could share some golden nuggets of the books.
Yeah, I'm going through one right now. I can't even remember the name of it. Hold on a second. It's Blackstone, the founder of Blackstone.
Barbarians at the Gate or King of Capital?
No, the one he just bought. Hold on a minute.
Oh, he just
There's a new one.
There's, I guess
New one.
He's the one that he.
Yeah. Schwartzman wrote it. Hold on, what's it called? It's called. There's a couple. You know what? I can just show you my book list. I mean, all of these things have been so powerful for me. Ego is the Enemy by Ryan Holiday. Extreme Ownership by 𝗖𝗽𝗶𝗁, the Navy SEAL. For me personally, there was a couple of things that were really critical earlier on in my career, and they're kind of old school, but they work. It was Think and Grow Rich, Napoleon Hill. Yeah. I love listening. That you can get Think and Grow Rich audio, the original audios that Napoleon Hill did. And then for me, I followed a lot of Jack Canfield's training. Jack Canfield is the author of Chicken Soup for the Soul. Jack is very academic, but he brings some powerful simplicity. Again, to accomplish. I think one of the things of a CEO is to simplify the complicated, right? And if you can do that, and if you can just lean into it and step into it on a daily basis, progress happens despite what we do. I'm a big believer in The Secret and the Law of Attraction. What you think about, you bring about. Says right on my board over there, replace my fear with faith. and let my actions reflect my intentions.
Nice.
Because I don't know about you guys, I know when I'm not on the beam. I know when I'm, I'm watching too much Netflix, or, I'm distracted and I'm not productive. I get pretty disgruntled when I'm not productive. So those are definitely part of it. Influential Mind, Tally Short, love that book. Chris Voss, Never Split the Difference. Get some good negotiating in there. So I could go on. I tell you a great book I love, and I revisit it often, is the four agreements. I don't know if you've read that one, The Four Agreements. Really good book. Who wrote that? Don Miguel Ruiz.
Okay.
Nice.
I got a lot of,
Awesome.
you got to keep going, right?
Books
Feed
are
the mind.
important. Books are important. Get the
For sure.
mind going. Get the mind fresh.
Yeah, and Dave, like, let us know. I mean, it's incredible. You have a fund, you do syndicated deal, you're very open-minded, you're on Clubhouse, you're very entrepreneurial, doing, open-minded to do business and, structuring in a different ways. How can people get in touch with you? And are you someone that's hard to get a hold of? Like
No.
these CEOs that live in the shadows that you have to go through bunch of gatekeepers?
Yeah, I'm glad you bring that up, brother. This is my blue collar background. If I see a CEO of a private equity company, male or female, flying around in a private jet and driving in a Rolls Royce, for me, it rubs me the wrong way. If the business is that good, then you should give more of the returns to the investors. Absolutely. That's how I look at it. So, and then the other CEO is the one that you described, that hides in the shadows behind the great big oak doors, the mahogany doors, smoking a big cigar, sitting in a leather chair, sifting a brandy. I'm not that guy either, right? I am that, my sleeves are rolled up, my armpits are sweaty, I'm ready to go, let's play. So you can get a hold of me simply by picking up a phone. You can call me at area code 781-922-4418. Please let my assistant know that you're reaching out via this podcast, this interview, so I know where you came from. You can go to freedomventure.com. I think if we get the video in there.
There we go.
And we'll share all of that below our YouTube.
Freedomventure.com.
We'll share that all below our YouTube, but just great to hear.
Pick up the phone, Instagram, Facebook.
Yes.
I mean, my social media is out there. I want to be approachable. For me, we've got a 5-10 year business plan at Freedom Venture. Our next fund is probably going to be 500 million, the third $1 billion, and then a $5 billion fund. So
incredible. Yeah.
I don't know if I can still be as attainable when we got, a $1 billion fund in action. But my promise is to always try to be, because look, whoever listens to this and invests any capital, you invest with the team, you invest with the people. Sticks and bricks are sticks and bricks. The due diligence is done on the team, first of all. Do you like those people, right? Do you like their story? Because it really is a story at the end of the day. Your story is powerful, successful in both your careers, and went, that's enough of that. This journey looks like it can help not only us, but a lot more people. That's a powerful story. That's attractive, right? So, invest with people first and profit second. And I think that formula has consistently served me well, and would anybody else. So yeah, that's me, baby.
You're
we
awesome.
love it, man. You are awesome.
So
You're definitely
incredible.
awesome. And we love to bring you back and watch you as you grow. We like to, have you back on our show at some point.
Love your energy. Love your story.
Yeah, absolutely.
It's
Definitely.
Here's my charge to you guys. You ready? I'm going to do it live, and don't edit it out.
Right.
Okay. Here's my charge to you. Find 15, 20 Canadian committed investors, and then we'll do a bus tour in Florida for those people. We will wine and dine. We'll introduce you guys into our community. You can get to see exactly what we're doing, meet the team, see the ugly properties, the pretty properties, and really get a nice feel for it with boots on the ground. I would much rather deal with 20 or 30 educated investors that are inspired, Whether they invest or not doesn't matter. Let's just teach them some great stuff while we're down there. All right. So there's my charge to you. You've got somewhere to go if you could put it together. All right. Good.
Yeah, we love that. We love that.
And we're going to work on it. We're definitely going to work
Yeah.
on it. And if you like, Ava here, yeah.
We're gonna end off with our last question that we love to ask every guest, and I can't wait to hear your advice. But what is your number one best advice that you would give to a passive investor or somebody wanting to start looking to passively invest?
Yeah, you don't have to know everything to do something. Okay, I think analysis paralysis and waiting for everything to be perfect is the curse of financial freedom. With that being said, do your due diligence, right? Is the person or persons or company that you're investing with, are they primarily a steward of your capital? Because that's my number one job. That's my number one job, is don't lose the money. Ever lose the freaking money. No, right? That's my number one job. So yeah, you don't have to know everything to do something. Ask a lot of questions and get comfortable with the people, because it is a partnership. It's a partnership. It's a trust. So that's my very best advice. Don't stop sitting on the sidelines. Get in the game, right? Get in the game. Lean into it. So yeah, that's the best advice I have.
Love it.
Woo,
Great
I love
advice.
that.
Great
Yeah.
advice.
Yeah.
Hey
Thank
Dave,
you so
we really
much,
appreciate
Dave.
having you. You actually put me in a
Yeah.
much more happier and energetic mood.
Really,
And I
yeah.
hope I'm certain that our viewers will have a lot of value added to their journey just by listening to you and listening to your inspirational story. We wish you all the best in your endeavors, in your fund, in your deals. We look forward to possibly doing a deal with you now that
Well, I'm going to be bringing him 30 Canadians.
30. He asked for 15 to 20. You're gonna
I'm
take
going
it
to do
over.
30. Absolutely.
I love her already. She's doubling down.
100%.
Awesome.
Let's
All
do
right.
it.
That
Let's
was
do
great.
it. Let's get together. I'd love to show you what we got going on in Florida and bring some friends.
Great. And the way we've structured it is the Canadian investors invest in our fund, and our fund invests into the US,
Yeah, SPV.
making it all compliant. And there's recourse for the Canadians. They're not just investing in the US if there's some
And
issues.
there's relief from double taxation.
Relief from double taxation.
Really big thing we're doing for the Canadian investors on this side. So
Yes,
we're excited about it.
Yeah, we can do fund to fund. Absolutely. Come on down. The returns are beautiful.
All right, man.
All right.
Really
Dave.
appreciate having you on.
See you guys.
Bless. Thank
Bye-bye.
you.
Bye.
Bye-bye.